Amigo Loans, once a leader in the UK's guarantor loan market, experienced a meteoric rise followed by a dramatic collapse. Its story is a cautionary tale about the risks of its business model and the consequences of inadequate regulation. The rise of Amigo Loans. Amigo's business model was a success story for a time. It targeted a specific demographic, individuals with poor credit history who were locked out of traditional lending. By requiring a guarantor, a friend or family member with a good credit score, Amigo could approve loans with lower risk. This model was highly profitable, and the company quickly grew to become a prominent player in the non-standard lending sector. They effectively positioned themselves as a compassionate alternative, basing their lending decisions on trust and common sense rather than just a credit score. The beginning of the end. The cracks in Amigo's model began to show as a surge of customer complaints emerged. Borrowers and their guarantors accused the company of mis-selling loans, claiming that proper affordability checks were not conducted. In many cases, loans were granted to borrowers who couldn't afford the repayments, putting the financial burden squarely on the guarantor. The Financial Ombudsman Service, FOS, began to uphold an increasing number of these complaints, finding that Amigo's lending practices were irresponsible. The collapse. The mounting complaints and the subsequent compensation claims created a massive financial liability for Amigo. To deal with the huge redress bill, the company attempted to get a scheme of arrangement approved by the courts, which would cap the amount of compensation it had to pay. This was a desperate attempt to stay solvent. However, after a series of legal battles and regulatory scrutiny, the schemes failed. Faced with a compensation bill it couldn't pay and unable to raise the necessary funds to continue operating, Amigo Loans officially ceased new lending in 2020 and began an orderly wind-down of the business. The company was ultimately liquidated, leaving many customers with only a small fraction of the compensation they were owed.